Well, the Hong Kong government is trying to combat rising property prices. In the past 6 months, it's raised the minimum down payment for home purchases by 10% and introduced a 15% stamp duty for home buyers purchasing multiple flats at the same time. It's also taken steps to make homes less profitable for banks, but it may be fighting a losing battle. Home prices have been climbing steadily since 2008, but demand for new flats is still strong. So some developers are offering buyers incentives like stamp duty subsidies and attractive mortgage plans. Well, for a closer look at Hong Kong's housing market, I'm joined from Hong Kong by Ronald Wan, the chief executive of Partners Capital International. Now, what's been pushing up the housing prices in Hong Kong?
I think it is a supply and demand problem because demand is so strong and the supply is rather limited. Even though we have seen increasing demand, supply in the past few years, but still the balance cannot be mixed, cannot be matched. First of all, another question we have been facing is that well, Hong Kong is actually the international financial center of China. Basically, the demand is not just coming from domestic market; it's also coming from mainland China. So basically, it creates a lot of problems. Another thing which has been troubling the market is that the rate of the borrowing, the cost of borrowing is very low. So basically, we've seen that because Hong Kong dollar is linked to the US dollar, a lot of liquidity has been flooding into the Hong Kong market. So basically, people have more confidence in property, in particular for Chinese people, they like to buy property. So basically, all the money goes into the property market. It's created a situation that even though the government has created a series of measures to control the market and control the borrowing and control the price, but still, the market is still skyrocketing. So basically, it creates a situation like what we have been facing right now.
And Ronald, as you mentioned, it's not just the domestic pressures, but also from foreign companies trying to come in. So how is this affecting the business landscape, especially for these companies trying to woo talent to Hong Kong?
Well, it creates certain problems because, when international company, foreign companies setting up, office in Hong Kong, they need to, rent place, for their, staff, So a lot of expatriates are actually complaining that, the place which where they have been living in is so small, so tiny, and also it's so expensive, and also it actually reduced the competitive advantage of Hong Kong. A lot of companies may move to Singapore, even to Shanghai or Shenzhen, even though the prices there is relatively high, but still, Hong Kong is the price is crazy. So basically, it forced a lot of companies, moving abroad, to seek their regional or international base.
Now, we have seen measures to try and cool the market, but obviously prices are still sky high. What else do you think needs to be done to really try and cool the market?
Well, the government has actually done a lot of things, to cool down the market since 2013. Basically in the past 4 years, they have been introduced various measures. But I think the most effective way to tackle the issue will be to increase the supply. But from planning to construction and to completion, it takes something like 4 to 5 years. Even though they rush out the supply, it will take a couple of years for the flats to come out. Also, we have another issues which we have to look at. For the past 20 years, in particular for the first 10 years after Hong Kong has been returned to China, basically the property market is down. It's just that in the past 10 years, the downtrend reversed and become an uptrend. So somehow in a lot of people's mind, people still kind of, cautious about whether the price is sustainable and whether the government should do more or do less. There has been argument within, society.
So if you're a first-time home buyer in Hong Kong, how attainable is it to become a homeowner?
Well, for young people and for university graduate, we started to work, and I think it is very difficult for them to buy a flat because I have done a survey in the past few weeks for affordable for okay apartment. It needs at least something like $1 million US, or even. Or we lower our expectation. We still require something like $5 million Hong Kong dollars, which converts into something like in excess of 85 850,000 US dollars. So it's still very expensive. And the salary, in Hong Kong in the past 20 years has not been increasing so much. So basically, I think it is very difficult for blue collar, for ordinary workers to buy a flat unless they already have a flat or their parents support them. So they really need to, the society really need to work out a way to help the young people and help the society to make it a more affordable place to live in.
All right, well, thank you so much for your insights. We'll have to leave it there. Our thanks to Ronald Wan, Chief Executive of Partners Capital International.